Hello, today is the 22nd of September. This is a market review, my thoughts on what's happening and what could be done about it. Uh, Today's release is being filmed on Monday, right after the market close. And with that being said, let's go straight to what's happening. Well, first and foremost, we got one rate cut during the previous week, the most important information right now. And we also got some additional Fed speak, which could be sort of translated into overall cautiousness. But the most important clarification of sorts, if it's even uh, applicable here, we will hear tomorrow on 23rd of September, Fed Chair Powell's speech. Durable goods on Thursday, GDP growth as well, existing home sales, and on Friday we will see core PCE prices and the personal income and spending. With that being said, let's go straight to the charts. Obviously, I'm quite bearish, was quite bearish about this market, and for me, the main indicator of which warrants cautiousness right now are so-called treasury companies, which are getting a bit of traction here and lots of attention on the street. And their business model is mostly based on the promise to do something bank-like with the assets they hoard. And the first one, obviously, is MicroStrategy, which is just strategy these days. As you can see, it has basically stopped following Bitcoin price, which is way stronger now. But that's not the case. The case is that I interpret these signs basically willingness to deploy significant amount of capital, and also while also willingness to deploy significant amounts of capital from the institutional side, while the asset at the same moment receives lots of attention from the retail side, which is also true now, especially given the fact that we have seen quite a run in Ethereum and other altcoins, and Bitcoin is also living higher than 100,000 mark, which is an obvious vote of confidence. And that is starting to feel a bit excessive for me, sentiment-wise, first and foremost. And there was sentiment was quite tame, by the way, but during the previous week we saw an increase, and right now bullishness prevails. And I couldn't contain my bearishness, so what I did is I actually tried trading some options, some crypto native options during the weekend, and let's say got lucky with it. You are always lucky in this business. An element of luck is always present, although it's our job to make it as manageable as possible. So this is my strike price, and it's in the money now, so it's good. And the setup I have mentioned also and talked about it on my X/Twitter account. I call this setup the 50-day moving average catch-up, and the premise here is quite simple. 50-day moving average is widely accepted as the sort of midterm moving average, which is being tracked by institutional traders, institutional desks, and when time comes to support the position, they are supposed to show up and do so. And if it fails to rally of it, that could mean that maybe they are not so interested, or at least not at the moment, or maybe they demand a discount, like it happened here in the second half of this year's June. But sometimes it also leads to corrections, like this is not the best example. Something like this is more alike to what I am expecting to happen here. So nothing abnormal is happening with the price now, as of this moment, because it could be another shakeout, it could rebase, volatility will contract and it will have another breakout to the upside, while also wiping my options, my puts to zero. Could very well be the case. But it also could be the first sort of crack in this bullish scenario, which is very, very predominant now. More and more money are being sucked into this rally. And to be honest with you, apart from this weakness in crypto, everything else looks quite bullish. Let's cycle through major coins at first. Obviously, here we can see BTC. It's quite okay. Actually, no big problem here. We can also notice that in the price structure of BTC, this consolidation is supposed to be dominated by distribution. What's interesting, and ETH we have already saw, and another reference point to take into consideration here is that these tops are supposed to represent all-time highs. Here we can open the ETH chart. I think we should switch to weekly chart where it will be easier. Yeah. Oh no, I was wrong. But nevertheless, this was supposed to be the all-time high, and it acts as a resistance now. But these three price points, which are 4,000 basically, are providing support now at this moment. You can see that it has bounced off a bit. So, an interesting situation. Solana, which was leading this rally, has found resistance here after this very inspiring rally. XRP is quite weak, and BNB is finally being met with some sales. What's interesting here, noticeable price behavior for me, is AVAX, which looks very, very decent, which this setup, this volatility contraction, which is quite longer actually, all these area of contracting price volatility looks really nice. And I don't have any fundamental knowledge on this, but this just looks so interesting, very, very different from what's happening in the market now. This demand and obviously willingness from the market to accumulate what's being distributed during this sell-off, which happened overnight, started overnight. And what else can we take a look here in this crypto space? Yeah, so total market capitalization of crypto is telling basically the same story, quite weak today, but not the end of the world. So we'll see. And here, basically, the weakness just ends. And actually, we are entering the territory of pure trend following, because this is where it shines, in my opinion. Obviously, the narrative, the core idea is that the recession is about to come, and the tariff situation is far from being resolved, actually getting a bit worse with the India and the States relationships sort of deteriorating a bit. But if you had just bought this breakout, well, SPY isn't that clean, and here is just better. You know, if you take this as a buy point, it just goes, and it continues to go. So, and this overall rally is basically intact if you take 50-day moving average into consideration from April. So it's one of the longest so-called lockout rallies ever observed. Same for Dow Jones, and same for Russell. This one I'm actually shorting. I would not disclose how because it's a bit complicated. It's quite asymmetric from the risk reward standpoint. It involves options, and the my risk is very small. Actually, it's 1% of total equity. Gotta be cautious during this market because I'm basically flat or even down a bit in my stocks account during this year. That's different from my crypto future situation, where I'm up quite a bit. And judging by today's action, it could very well continue charging ahead, despite this triple top pattern, which is very well pronounced. But we'll see. What makes me feel that it's about to continue charging ahead at this point is the situation at the level of individual stocks. But before we take a look at them, let me show you what's happening in gold. And in my opinion, gold is telling us that despite the cautious Fed, maybe Trump's administration will be able to take control of the Federal Reserve and make them lower rates, even if the current boards of directors is sort of skeptical of inflation being completely tamed. Maybe the situation is about to change with the change of management. If they're declared new focus on the situation in the economy overall, in hiring, would not be enough to satisfy this administration's expectations. Maybe a bit of divergence we can see here in crude. Obviously, it's under strategic pressure from the fact that China is going green, and they have a history of being able to develop bold plans, very large scale plans, and implement them. Actually, this is the long-term pressure on the price, in my opinion. But this is not supposed to happen so fast. So a bit of weakness here maybe can be counted as another sign of weakness in the economy here. But that's basically that, and weakness in the decentralized finance domain are the only two bearish things which I'm aware of. And what we can see here is that major banks are strong. Citigroup, US Bancorp. Nvidia is strong, which is also bullish for the market, and you can see that the volume today was big also. Other semiconductors are strong. AMD. Recent IPOs such as Carman are strong as well. Beta Bionics. This one is speculative. Well, as you can see, Tempus AI was met with sales today, but that's okay for such a volatile name. Tesla finally meeting some resistance near highs here, but as with the previous names, basically it's absolutely okay. It's extremely strong for a company of that size. Credo Tech, CRDO, meeting some distribution or some stalls a bit, but once again, nothing too problematic, and it made quite a run. Shopify is one of those whom I actually managed to buy, so, and I'm selling a bit into strength, and maybe we'll leave a runner. Actually, my final version of my money management system tells me to do so, so that's what about to happen. We ride is strong too, but meeting some sales at the level of the descending 200-day. IonQ, another explosive story here, and the right number of them here. So obviously it could change quite a bit, but unless Jerome Powell says something absolutely bearish, which will be able to reverse all this accumulation in all this variety of individual stocks and stock market indices, then the weakness in this crypto situation could be sort of a sign of something something ominous in the markets. But apart from that, it's a bull market. So for me, I have shorts, and these options are expirations are quite away. So it's basically I'm hedged, and very asymmetrically hedged. So it's time to play catch up. I did not do any screening after this trading session. I usually do it in the morning, but I also foresee that it's going to be quite problematic because everything is extended now, and these names which I have shown, I remember Karman quite well because yeah, KRMN is the name. Yeah, because it was one of the best and also clearly viable. Not a fan of buying gaps, but here it's so obvious. A classic gap up which screws people. It would be quite difficult to buy situations like this because you need them to consolidate a bit, and when there is no correction, it's difficult to find such situations because they are automatically can be deemed as laggards. And when indices will correct, which they will at some point, inevitably, the weak ones will correct, and they will correct quite violently, obviously, because there are all the money which were willing to be deployed in this market are already in these leaders. So don't expect much supports in those who lag. So that's the current situation. Obviously, for daily updates, you can join me on X/Twitter. The link will be down below the video. Like and subscribe. And take care, and let's be in touch.